live to the millions, the Dylan Holy Experience. That is welcome to your midweek market recap. It is 6 p.m. Pacific Standard Time on the West Coast, 9 p.m. Eastern Standard Time for those of you watching on the East Coast, which, by the way, much love to you. The Dylan Holy Experience loves you in the continental United States and, of course, all over the world. And ladies and gentlemen, do we have an action-packed show for you tonight? Let's just jump right into it. Wall Street futures were little changed on Wednesday evening as investors weighed recession risk following the latest meeting minutes from the Federal Reserve. And you bet your sweet bucket we're going to be talking about that. But we have to talk about some futures and some performance first. Futures linked to the Dow Jones Industrial Average were 60 points lower, or 0.2%, while NASDAQ 100 futures inched down 0.1%, and futures tied to the S&P 500 fell about 0.2%. Stocks ended Wednesday's regular trading session on a down note. The S&P 500 closed 0.41% lower, while the NASDAQ Composite dropped 0.85%. The Dow snapped a 4-day winning streak, ending the day down 38.29%, or 0.11%. And the rest of this article, it's just them talking about, the biggest stock moves, and they're breaking down some of the key data that may have led to a drop in the markets today. One of those key pieces of information being some insight we got from the Federal Reserve. And this is the biggest, I think, key takeaway. Oh, dude. Oh, hey, actually, you know what? Fuck it, baby. Key takeaway. He said key takeaway? Oh, okay. I see you. And I raise you a subtle plug of twitter.com/RealDylanHoly, host of the Dylan Holy Experience, as the millions are watching it play out right now. And again, once again, always and forever, never financial advice on the Dylan Holy Experience. But yeah. Key takeaways, go ahead and follow at Real Dylan Holy. We always give you key takeaways whenever the market is open. The Dylan Holy Experience is open, giving you the most important morsels, hand-parsed morsels, by the way, hand-parsed morsels from the day. But let's see what this key takeaway is for the Fed minutes. Quote, given their assessment of the potential economic effects of the recent banking sector developments, the staff's projection at the time of the March meeting included a mild recession starting later this year with a recovery over the subsequent 2 years, end quote. That's what the meeting summary said. So ladies and gentlemen, it's Jover, bro. What's always interesting that I've seen from the market psychology when there is a possible recession is there's like a 20% drop on the Dow Jones Industrial Average. And it's like, Dylan, I don't know. I think you might just be making this up. Source, trust me, bro, because we're about to pull it up live in front of the millions. So let's take a look. And I'll pull up, let's just say Janet Yellen, because I remember covering this. This was back in September or October of last year, right when Dylan Holy Experience really got started. This was something that I would dedicate, like an hour or 2 hours to talking about, like every single time that I did a live stream. We have definitely honed it in a little bit. We've definitely brought in the reins on the Dylan Holy Experience, but we still go off on tangents sometimes about this. But Janet Yellen, she, for instance, not a technical or recession textbook definition. So Janet Yellen, yes, this was July of last year. So let's call it July 28th, 2022. I will timestamp that, and I'm going to timestamp it on the S&P 500. But let's see what Janet Yellen said. Actually, let's take a look at what was going on July 28th on the S&P 500. Or if the millions want the Dow Jones Industrial Average. Okay, everyone's saying Dow Jones? All right, I guess we're going to do Dow Jones. But let's take a look at the Dow Jones. So, at this time, I guess we can, screw it. Let's go down to the daily. We have the resources. It makes no difference in terms of how it's going to be. But if we take a look, so on July 28th, Thursday. Okay. Sweet. Thursday, July 28th. Okay. 32. Okay. Let's take a wee fucking a wee. I know there's like a tool. It's price and date range. I'll just take that. Screw it. And we're looking for July 28th. There we go. Okay. Boom. Is that it? Okay. Yeah, okay. So, July 28th, 2022. The Dow Jones Industrial Average had dropped nearly 12% from its all-time high to where it was at that point. Now, it went lower that year, but you can't see like 3 months into the future. If everyone can do that, then the market would be a whole different game. But they didn't know that at the time. So at the time, the S&P 500 had been rebounding. So it's rebounding off a low, off of a 52-week low. It touched just below 30,000. It's trading at that point around like 32,500-ish. So it looks like it was on the upswing. And Janet Yellen, when talking about a recession, which like if the Dow Jones Industrial Average is down nearly 12%, this was also at the same time. If we take a look at like July CPI breakdown from CNBC, let's take a look here because they'll talk about the actual numbers and then I think they'll actually give a breakdown. But the S&P 500 was down, or the Dow Jones was down nearly 12%. The CPI in July of 2020, oh my gosh, why are they showing us July 2022 breakdown? Oh my gosh, dude. Dude, it's like doing the back phone, but come on, y'all, chill. Ayo, chill. So, the CPI was at 8.5%. So the Dow Jones was down 12%. The consumer price index was 8.5%. So it was like we were coming off the 40-year high of inflation in June. And if you take a look at the year-over-year food chain, it says, oh no, this is core CPI. Core CPI is bullshit. That dude, holy shit. This is such a crazy tangent, but like I'm trying to find this food number, but the food number doesn't even really matter. Inflation, what they were telling people was 8.5%, nearly a 40-year high, coming off of a 40-year high, and Dow Jones down nearly 12%. And Janet Yellen says, recession is a broad-based weakening of our economy that includes substantial layoffs, business closures, strains in household finances, and a slowdown in the private sector activity. That is not what we are seeing right now. When you look at the economy, job creation is continuing, household finances remain strong, and consumers are spending and businesses are growing. This is what Janet Yellen said off of a 40-year high of inflation. The Dow Jones being down nearly 12%. And obviously, there were some factors that they were looking at. Their argument was this 1.6% contraction in Q1 of 2022. Not really a big deal. And then 2 straight economic declines, Yes, 2 straight quarters, it did drop, but the job market was really, really hot. Fair enough. The job market was hot. However, the job market is actually no longer uber hot. Job growth totals 236,000 in March, near expectations as hiring pace slows. It's just a video? All right. Well, yeah. So job growth is slowing. We have fallen below for the first time since like 2021. Open jobs have fallen below 10 million, which like like the job market was like, everyone knows how white hot that was, dude. Like there was actually a worker shortage because, and you know, my socialist friends are going to go crazy about this, but people got lazy, bro. Everyone got their checks. Everyone got used to work from home. It was like the peak of a speculative bubble and no one really wanted to work. So there was 10.5 million job openings just in February, and it fell to 9.9 million the first time since May of 2021. So stuff is starting to, the job market is starting to contract for the first time really since May of 2021. Now, it's interesting that I bring up this Janet Yellen stuff because we're just ripping, baby. The Dylan Holy experience is like jazz, dude. The millions are seeing it play out as I'm just kind of like, I'm just going through the motions with it. But Janet Yellen, what's interesting is all of these things that she brought up, we're actually going to address tonight. It's actually quite interesting. So these substantial layoffs. Shout out to layoffs.fyi. But since that article was put out, nearly 170,000 employees have been laid off in just tech alone. Nearly 170,000 employees have been laid off. Now that being said, how many people work in the tech sector in the US? 12.2 million. So it's definitely, there's a lot of people that are still not being laid off. And I think those are actually core individuals. Like I do think a lot of the tech industry is extremely bloated, but a lot of those people are core individuals. And this is also not just include like these layoff numbers, because I try to be transparent with you. Like I don't want to say things to try and fit a narrative that like stuff is like going down or going up and try to do doom and gloom. So these layoff numbers are coming from like, you know, it's not just United States companies and it's not just, you know, tech people that have been laid off in the United States. So I could say in the United States, it's probably closer to like 100 to 125,000, right around there, but still like not like, it's not great. And with that, you know, stuff is still increasing in price. Like these people are getting laid off. And another thing that Janet Yellen is talking about, not just substantial layoffs, because those layoffs that tech has been having are pretty substantial, but there are strains in household finances. I mean, I was talking about 40-year high record the CPI numbers came out today, and let's just break those down for this month. The consumer price index eased to 5% on an annual basis, down from 6% year over year. So I definitely think that the inflation like probably peaked, probably short term, you know, macro, long term. I mean, we all know what happens with cost of living. We can just like, I mean, I'll first show what's happening with food, and then we can talk about food a bit further, because that's really the most important thing. Like the CPI, they wait like, used cars. So stuff is slowing down. But if we take a look at food is still 8.5% more expensive than it was last year. Food away from home is still nearly 5%, or it's still nearly 9% higher than where it was 1 year ago. Eggs are up 36%, margarine or butter, 33.4%. Frozen vegetables, 20%. Airfare, 17%, but that's also because of gas prices, which did decline. But, you know, not by much. At least in California, they didn't decline by much, and that's where I'm coming at you live from. White bread is 16.5% more expensive. Food from vending machines, 16.2%. Fresh whole chicken, 8.9% higher. That being said, Costco still selling their rotisserie chicken at $5. They are beasts. Same thing with their $1.50 hot dog. Shouty knows I love me a $1.50 hot dog. But no, food is still getting more expensive. And like people will literally cut out everything else except food. Now, here's another chart that I saw a few days ago that I thought was really, really interesting. And it is the price of food. Food, bada boom. Now, how I perceive this graph and because this is technically an index, so it's not going to get like how I interpret this consumer price index for food is like what you're on at, like how much on average you are buying at the grocery store. So let's call it from 1945. Let's say after World War II. Because, dude, this shit goes back to like 1915. But let's go to like 1945, like modern era industrialized U.S. farming. Like, I feel like that's fair. So if we're taking a look at the, oh man, that was actually like beautiful. Holy shit, that was like great. Come on, there we go. Nice. All right, so we have basically, after World War II, or yeah, so coming out of World War, like mid World War II to right now, the average amount of money that people spend in food after World War II, $17.50. $17.50 in January of 1946. World War II ended in August of 45. January 1946, the average cost of going to a grocery store was $17.50. Today, in March of 2023, it is $320.86. If you were to interpret the CPI for food that way, like basically the average grocery store purchase, $320. So consumers are still getting fucking strained. I mean, just going from like the start of COVID, it was at $262. Now it's $320. So people are getting choked the hell out, man. People are getting suffocated. I'm getting suffocated, dude. Everyone that I know is getting suffocated. Like everyone is struggling right now. There's not a single person that I know that is like, man, I'm fucking rocking it right now. That's a recession, dude. Like I've been saying that we've been in a recession since like August of last year. And even then we've been in a recession since probably this time last year. Since like we've been in a recession for a full year. And the Fed is just now starting to be like, oh, okay. Yeah, we might be heading towards a recession. The Fed is a lagging indicator. The entire psychology of the market, including myself. I'm not immune for them. I don't have this like omniscient third eye for the market. I just read this stuff and I find it interesting, and then I talk about it. I'm a lagging indicator. Humans are lagging indicators. Anything a human says about the stock market is a lagging indicator of past performance. That's all it is. So we've been in a recession for the last year. And the Fed is talking about, oh yeah, well, we might be headed towards a minor recession in a few months. Where if they're saying that, it may not be bueno. But people are getting strangled. Still, food is never going to get cheaper. Gasoline can fluctuate. Gasoline can fluctuate. It does trend upward. I think part of that is rising global conflicts and geopolitical conflicts. I think part of that is rising inflation. I think part of that is policy. I think part of that is corporate hoarding and corporate profits, because people talk about like, oh, OPEC and OPEC Plus are cartels, are oil cartels. Guess what, honey? So is the United States. We have Exxon, Chevron, Philip, or ConocoPhillips. We have like 76, Marathon, Occidental Petroleum. Like, bro, we have the largest oil corporations on planet Earth, publicly traded oil corporations. Saudi Aramco still has, and this is like all based off of like estimated valuation. Excuse me, I'm a tad parched. Based off of like, private estimations, but Saudi Aramco is still valued at like $1.52 trillion. And that's like not on any publicly, I think it's publicly traded on like the Riyadh, Saudi Arabian stock market or stock exchange, but I don't think it's traded anywhere else. They were exploring a New York Stock Exchange IPO before COVID, and then they just kind of stopped talking about that, so I don't think they're going to trade on the U.S. exchanges anytime soon. But there's like all of this stuff, like gasoline, just running it back to that, like gasoline's only going to get more expensive and it fluctuates. Food's not fluctuating, dude. Like it can go up and down, and like I think most of that's kind of like produce. But other than that, like food is not getting any less cheap, dude. Like clearly not getting any less cheap. Just off of this graph, like the cost of food, the cost of living, it just food, dude. Just food. Like basically food and water and shelter are like the most basic necessities. Like that, like everything else that we consider a necessity is mostly because of like the industrialized standards of where the USA is currently at. But like biological base needs, food being one of them. If we take a look at our handy dandy calculator, here. Price of food, it was, I think I said like $17.50. Yeah, $17.50. So if we take a look at 320.86 divided by $17.50, the price of food has gone up 1,800%. The price of food has gone up 1,800% in the last 77 years. If my math's right, 77, 45, 78, 78 years. In the last 78 years, the price of food has gone up 1,833%. And I do think that this is mostly due to the inflationary aspect of how the US dollar works. I think that's really the root of it. But it's also corporate profits. I'm not going to deny that, bro. Are you kidding me? Corporations, food processing corporations? Dude, when are you not going to eat food? And if you make food that people are addicted to, which is what food processing corporations do. Yeah, man, that is literally $1 billion, if not $1 trillion idea. Full disclosure, by the way, I do own General Mills. I own Hershey. I own Kellogg's, and I own J.M. Smucker's Corporation. Just for the sheer sake of transparency. I do own all of these companies, but the cost of living is not getting any lower. And I think they are strangling Americans to the point where most Americans are going to be using tax refunds to boost savings or pay off debt. 44% of respondents in a CNBC survey have earmarked the tax return funds to pay off debt or bills. More than 1/3 of Americans are saving their tax refund this season, according to a CNBC Your Money Financial Confidence. Thick Dad 42069. Hey, man. Love you. Shout out. Represent. Much love for Thick Dad 42069. Thank you so much for the follow. Hopefully you're enjoying. If you're digging it, just drop something in chat. I love chatting with people about this stuff. What's up, Dylan? LMAO. Dude, what's up, man? Shout out Braden, an absolute shouty, and absolutely double cheeked up on a Wednesday evening watching the Dylan Holy Experience present the midweek market recap, looking shouty. But yeah, dude, question, and you definitely don't have to answer this. If you don't want to answer this, go for it. But like financially right now, how are you feeling? Are you feeling like good about your finances, neutral about your finances, or bad about your finances? Like, what are you feeling about this market? Like, do you think that stuff's going to get more expensive? Are you worried at all about it? Like, absolutely not. LMAO. Yeah, I guess that's how most people are. But yeah, like I think that like everyone can resonate with this. Like I think this idea of like, oh my God, I got my tax refund and I'm gonna go treat myself to something, bro. That is not happening anymore. I don't know a single person doing that. Like I'm in California, it's basically impossible to survive. True, dude. Shout out to the 36% income tax rate. Whoop 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 whoop, dude. Me working my absolute ass off, California. I could really go for like 1/3 of what you make. No, like California's ass, dude. There's a reason the Dylan Holy Experience at some point in the very near future is going to be relocating to Nevada. But no, I think these days of people treating themselves with their tax return, those are done, dude. Like people are going, like, dude, my entire tax return went into my savings or paying off debt. And I think that's how most Americans are. Like, dude, I'm an average American and you're an average American. This is how most of us live. Speaking of which, another dark side, I think, of how our system is set up, and this could be good or bad in terms of how you're going to look at it. The entire system in America is built on this idea of financing. Taking debt out, paying it back later. That's it. Well, luckily, I don't have a whole lot of debt besides car payments, so mine just went straight to savings. That's what we like to see. That's why you still go. Don't go. No, that's great, man. I think, like, the best thing, like, if you don't know what to do with your tax return, the best thing to do, just throw that shit into savings. Like, just have it sit there. I do think, and I can't give out financial advice to the millions because I'm not a licensed financial advisor, nor should anyone take this as financial advice. I do think that people should start investing. Obviously, like, this market is the market is always volatile. Like people are like, oh, I'm not going to invest right now. Market is volatile. It's like, dude, we never have any idea with what's going to happen in the market. So I think that people should possibly start to look into investing. It sounds like you don't have a bunch of overhead right now, and you have the biggest asset in the entire world on your side, and that is time. You still have more tomorrows than yesterdays. And that's the big thing with investing, dude. Live like you're going to die tomorrow. I've definitely been looking into investing. I need to do more homework on it for sure. Yeah, man, it's the thing is like the actual scope of investing, it's actually like pretty easy in concept. Like, I'm going to buy things that I think are going to go up in value. And I think that I'm going to buy assets that are going to be more valuable in the future than what they are right now. And you said, dude, I have robots do all of my investing. I just have auto payments, go out, and I'm buying just like the biggest, the biggest indexes of like stocks that like the largest companies on planet Earth. Like, I just buy a bit of those every single week. I buy companies that pay me money to hold them, called dividends. Like, bro, dividends, man. All these people talking about passive income. Dude, dividends are literally an infinite money glitch. Like, I hold Kellogg's Corporation, for instance. I hold Kellogg's Corporation. Dude, Kellogg's, cereal, Cheez-Its, processed, delicious cracker snacks and stuff, and Frosted Flakes that I, douse in fucking milk and then eat it up because I love me some Kellogg's. They pay me, what's their dividend yield? They pay me basically like 3% every year just for holding them. All I do is hold Kellogg's and they pay me money. I love that, dude. I love passive income. So I think that you have so much financial potential. No question, bro. Like not to sound like a life insurance salesman, because I've had life insurance salesmen talk to me and they're like, oh man, you have time on your side. Time's your biggest asset. Get a life insurance policy with us. Not any of that stuff, but dude, the only thing that I want to do on the Dylan Holy Experience is give people the best financial information they can get. Give people the most entertainment they can get on the internet. And see y'all get rich as fuck. That's it, dude. That's all it's been about. I want to see y'all get fucking blindingly rich, dude. I want you to be so rich, you're bored with money. What the fuck am I going to do with money? You're going to be making so much money, you can Pablo Escobar that sumbitch, dude. Light that shit on fire for warmth. That's what the Dylan Holy Experience is about. Now, going back to this right now, hopefully that's gotten you on the side of investing, but if not, hey baby, your body, your choice, bro. Dylan Holy Experience in California, little socially liberal. The survey from Business Insider, or from the New York Federal Reserve, found that the perceived probability of missing a minimum debt payment in the next 3 months climbed to 10.9%. It is below the 12-month trailing average of 11.4%. but it's still 10.9%. So what this is saying is there's like 10.9% of the perceived population that is probably going to default on a loan this year. And it goes back to this idea of Americans are getting strangled. Food, being laid off, cost of living going up. I mean, just it feels like the cost of living in the last 2 years has doubled. Like the real cost of living. Not like, oh, the price of a used car. Because that's how like people gauge inflation. That's how the media gauges inflation. It's like, oh, the price of a used car. The price of buying a plane ticket and going on vacation and going to a hotel and using airfare. Like, that's how they gauge inflation. Like, the price of food has actually very little impact on the consumer price index, which is the key, like, gateway type of inflation metric. And what this is showing is that Americans can't keep up. The American savings rate is at the lowest it's ever been. Basically, how much money people have is at the lowest it's ever been, and the cost of living is at the highest it's ever been. People are getting strangled, dude. It's fucked up. It's rough to see. So going back to I guess this broad part of the Dylan Holy experience that we've been talking about here is humans for the market. They are lagging indicators. And everything that Janet Yellen, when she was talking about how we're not in a recession in July of 2022, which by that point we had already been in a recession for like 6 months, 7 months. All this stuff that she's talking about, how we haven't been in it, we haven't, at that point, we hadn't seen substantial layoffs, business closures, strains in household finances, or any slowdown in the private sector. We are now seeing those. Like every single one of them. And I actually I talked about every single one of these things within the last 32 minutes. Like all of this is happening right now. So humans are lagging indicators. And, the Fed is projecting a recession in the next 2 months due to a banking crisis. No, Joe Blow. It's because you printed $8 trillion fucking dollars in the middle of COVID, and everyone's gonna take Joe Blow is Joe Biden. No, man. Joe Blow's the fucking system. That's who Joe Blow is. Donald Trump printed $8 trillion in COVID. That wasn't Joe Biden. That was Donald Trump. And listen, dude, I'm not. I guess I'm for the sake of transparency. I'm gonna leak it. I'm gonna say it to the millions right here. I voted for Donald Trump in 2020. And there are some things that I did not agree with in his federal policy and in his monetary policy. But no one's perfect. No one has perfect monetary policy. And I don't necessarily agree with them printing $8 trillion during COVID. But that's what's going to cause a recession. What's going to cause a recession is dropping interest rates to 0%, which is what this guy did, which is what Jerome Powell did. And then causing the market to overheat in an already contracting market in 2019. They just dropped interest rates to 0 and let that shit go. Send it, dude. Everyone gets a Tesla. Everyone gets a car. Same, I felt as though Trump was the better option of the two. Yeah, man, I mean, bro, Joe Biden sucks. I find Donald Trump very entertaining. And I just think at this point, nationalism, oh my God. Dude, oh God, the Trump rabbit hole is just real fun. No, I get my Cliff's Notes of it is I can definitely agree with you. Joe Biden is ass. Joe Biden really, thinking about it, I don't think has done a single positive thing to America. Anything that he has touched has literally just fallen to shambles. There's not a single thing. Maybe the first he did push out the other $1,400 in stimulus. And it's nice getting money, but even that type of monetary policy, they're just printing money and giving it away. So the Fed's going to say that the banking crisis is what caused a recession. No, dude. What caused a recession is you printed all this money, loaned it all out, overheated the economy. And they shut the economy down, and then within 2 months, 3 months of the economy being shut down, we saw an all-time high on paper. The U.S. economy has never been valued more. And dude, like production was down like 50% on stuff. The cost of living, the cost of raw materials was like, dude, lumber had gone up 17 times. Like the US economy was overheating and there was a massive supply shortage, which is what led to like insane astronomical prices on, say, the price of a home. And that has to pull back, that has to contract. And being in a recession is a neutral event. A contracting event is a neutral event. Like there's nothing wrong with being in a recession. It sucks. Shit's ass right now. And honestly, I'm going to say it, I think it's probably going to get worse. It's probably going to get worse over the next 2 to 5 years. For our quality of life, it's probably going to get worse. But a recession and a contraction event is like I view it in the same way as being in a bull market or an expansion event. It's like it's ebb and flow. When the market grows, it must shrink. And then from it shrinking, it must grow. So that is kind of my spiel on what's going on in the economy. Now we just kind of have some overall like general news stuff. Texas lawmakers are proposing a gold-backed digital currency. So think of like being able to hold like a gold coin and it's actually backed by a gold coin in your wallet. It's going to be more liquid than physical gold. And the idea is it'll basically track the price of gold. I think this is cool. I've always thought I've always been fascinated by these assets. What is interesting about this is, so it's Senate Bill 2334, introduced by Senator Brian Hughes, and House Bill 4903, introduced by Representative Mark D'Orazio of Texas, both of which are in the Texas Republican Party, Grand Old Party GOP. And what makes this super interesting is the Republican Party has really been the party that has pushed against central bank digital currencies. And here these guys are proposing a gold-backed central bank digital currency. And I think the real problem that people have with a central bank digital currency isn't necessarily the idea of it, because like 90% of the US dollars right now are only digital. Like it's all on our phones. The US dollar is basically a digital currency already. It has a tangibility. I can go to an ATM and at any given point pull out the $3 in my account. But it still has that tangibility factor. So I think people are comfortable and generally okay with dealing with digital dollars because we're already doing that. 90% of Americans are already doing that. I think a lot of people had an issue with this idea of like, oh, they can just make, like, if it's a dollar digital currency, then they can just infinitely print dollars, and then like this whole idea of horrible monetary policy and inflation just get much, much worse. And they don't want the NWO, the New World Order, and Klaus Schwab of the World Economic Council. They don't want, the top 1% to control their currency, which I can totally get, but they already do. Anyway, yeah, I think people, they're more open to having like a gold-backed digital currency. And I'm all for assets like this. I find that I think that gold-backed digital currency is fascinating. I think it's super cool. It's generally run of the mill right now. So like it's just kind of the standard, like, yeah, they're going to be able to like have banks offer this thing, and it's going to be kind of in like the actual gold is going to be stored in like a real life vault, and it'll have monetary value that's attached to it on like certain blockchains, so Ethereum, Solana, stuff like that. But yeah, man, I think this stuff is pretty cool, and this just hit the House floor, and the Dylan Holy Experience is going to be covering it if there's any further congressional activity on it. Let's move over to Elon Musk world. Tesla has cut U.S. prices for the 5th time since January. If we take a look at the actual percentages, it's been dropped by. Tesla has cut the price of its base Model 3 by a cumulative 11% since the start of the year, and a 20% reduction on its base Model Y. Choked on water right there. And I think part of this is them bringing prices down to try to get more people to buy them, because Teslas got pretty expensive. Like base Teslas got pretty expensive. People, they're canceling their orders. But I think the other thing too is they are hitting what they've been going for, and that's the economy of scale. They are able to produce. They're able to produce these goods for less and less and less. Yeah, this one's probably a higher quality. At low capacities, unit costs are always the highest. But with the economy of scale, the better that they get at making Teslas, whether it be the Model 3 or Model Y, at high capacities, unit costs are the lowest because they're able to basically bulk get all of these parts, and they have machines building them, and they've refined the machines. So this is Tesla working itself out. Like this is their 10-year vision. This is what they've been working for. The thing is with Teslas is you got to get them offline. I wouldn't trust a secondhand Tesla because of that battery. Could just be me being paranoid though. No man, I was thinking about this too. Like I want to get a Tesla. I think the Tesla Cybertruck is the coolest car ever made. But any like secondhand battery based car is pretty sketch, bro. Like I wouldn't want a secondhand battery. Like even Priuses. Like I would be sketched out about a Prius, let alone a fucking full Tesla. Like I'm definitely with you. Like I think if you buy them new, that's cool. But like if you're buying a car secondhand, I think combustible engine's the way to go, dude. Speaking of which, I think you may be interested in this, but they're making a hybrid Tacoma. Looks pretty cool. Because that, like, dude, a Prius Tacoma. I mean, if it's like not as cool, or if it doesn't have as good of car performance, like horsepower and everything, as a normal Tacoma, it doesn't mean shit. But I think that the hybrid cars are probably the most interesting types of cars. I think Teslas are cool, but they have some types of limitations. One of them on the Cybertruck specifically being it's not out yet, and it's probably not going to come out for another like 2 to 3 years mass market. So it doesn't even matter. I saw this, it looks decent, but I would use it for street hauling more than crawling. True. Yeah, like I definitely wouldn't crawl in this, but like I'm also not a crawler. Like I'm definitely gonna be a pavement princess. I'm definitely gonna have like a truck and like never go off-roading in it. Like I'm definitely gonna be like fake cowboy, stunt cowboy, dude, full on rhinestone cowboy. Let's go, rhinestone cowboy. Yeah, I think like I'm definitely not. I'm not going off road with this or like crawling or anything. I think like if I were to go crawling, I would like. I've actually been looking at like old 4Runners, dude. Toyota, possibly the most goated automobile manufacturer, dude. 4Runners gassed, Corollas gassed, Camrys gassed, Tacomas gassed. Like dude, like Priuses gassed. Like they're all so good. My dad has a Highlander. Like, dude, the Holies are definitely a Toyota toting family. But yeah, like, dude, 4Runner off-roading, dude, that shit sounds so cool. Well, yeah, the torque in those trucks with the battery-powered engines would be ridiculous when it comes to hauling. Yeah, like I know that the Ford F-150 Lightning has a pretty crazy towing capacity, but I know that if it's towing like a 6,000 ton load or like a 3 ton 6,000 pound load, like I know that it can only get like 29 miles of actual range. So I'm interested to see what an engine is going to do with that as well. But yeah, man, I think that shit's going to be pretty cool. Back to Elon Musk world, Cybertruck, yada yada yada. X Corp. So Braden, I'm sure you know that Mr. Musk has purchased Twitter, and Twitter used to be like its own publicly traded company. And then when Musk bought it, he took it off the market, and Twitter Incorporated, not Twitter the app, but Twitter Incorporated now ceases to exist. So the actual owners of the Twitter social media app are now X Corp, which is a subsidiary of Elon Musk's X Holding Corporation. So what Musk wants to do is create the everything app called X, and one of those things oh yes, I can't wait to buy my blue check mark. Oh yeah, baby, that's what's up, dude. That's your social credit score, dude. Just like spending like $50 a month on like being verified on Twitter and stuff like that, and Facebook and Instagram and Twitch probably at some point too. It is an interesting business model because people are like, yeah, I kind of want to like be verified, me included. But no, like this idea of a super app, China, it already has this. It's called WeChat. It has over 1 billion monthly active users. It's the world's largest standalone mobile app in 2018. And there's going to be an American version, and they're working towards it, and it's called X. I do think it's a cool name, but I would prefer to not have corporate overlords, and this is exactly what they're talking about doing. It's actually quite scary, and I'm not the biggest fan of it. But I prefer to have Twitter owned by Musk over who was owning it before, because it's still like a corporate billionaire who owns like a free speech or like a social media, what should be a free speech platform. So there is going to be a certain degree of bias there. But I feel like there's less censorship now than what was going on even 6 months ago. So I like Elon Musk. I think he's doing a good job with Twitter overall. But again, like, I'm not going to place him on a pedestal. I'm not going to say that he's, a tech deity who is blessing us with his presence, and we should accept everything that he does blindly and with no apprehension. But yeah, so now Twitter is owned by, it's like fully owned by a Musk holding corporation. And on top of that, Twitter, and I think this was a very good move by them, but Twitter, since the acquisition, has laid off 80% of its staff. So it's gone from about 8,000 people to 1,500, more than 6,000 people at Twitter. And there was a bunch of crazy bloat. Like, I think that Twitter was extremely bloated, and they're actually getting back to break even, which I think is good. I think is a very good thing. Speaking of Twitter, NPR is leaving Twitter. They're quitting Twitter, and they will stop posting new content on all of its 52 official Twitter feeds. NPR was designated as state-affiliated media because it is. They literally get money from the state. And NPR is saying Twitter is taking actions that undermine our credibility by falsely implying that we are not editorially independent. I think NPR is just freaking the hell out for no reason. I don't know. This is just like fake outrage. Watch them be back in 6 months. NPR is probably going to be back in 6 months. Watch. This is all a fucking show. And even if they aren't, like, I don't care. Like, I don't really get, I mean, I sometimes use National Public Radio for a source, but like very rarely do I. Like they're just like, it's like PBS, like they're I mean, everyone says that they're center, but like they're kind of left leaning. Let's be honest here. I think they're less biased than like CNN, but anyone, I mean, not anyone can be less biased than CNN, but like, I don't know. They're less biased, I think, than CNN, but it's still like it's literally government funded. Same thing with Voice of America. It's literally government funded. And I think that this was a fair designation, and NPR lost it. Who the fuck cares, dude? Get the fuck off of Twitter. I really do not care at all. Now, we have some overall, I guess, like way broader stuff. The Tupperware Corporation may go bust. Tupperware stock, and I posted this on Monday. I actually wonder what Tupperware stock's doing right now. Let's take a wee gander. Let's take a week and oh, they're up 6% today. Hey, not bad. I guess we could have traded that dead cat bounce, You feel me? Tupperware Container Corporation has dropped basically 50% in the last 3 days. They are having debt pressures mount, so the company has delayed its Form 10-K, which is basically their balance sheet. They give information about how much debt they have, how many assets they have, how much they've been paying on the debt, yada yada yada, and they've delayed it. Now, with this delayment, Tupperware Corporation has received a notice of non-compliance from the New York Stock Exchange due to the delayed filing. Tupperware is looking at the real estate portfolio for a potential sale or sale and leaseback deal of what they own. But yeah, Tupperware probably going to get bought out. I mean, just looking at if you look at the last year, if you look at the last 5 years, dude, it's gone from, in 2018, it went from $43 down to $1.32. If we go even further, it went from $94 to $1.32. The Tupperware Corporation is down 97% over the last 10 years. So they're probably going to get bought out. I bought Tupperware once, and I've been using it for 10 years. It doesn't have a great recurring client basis because you basically buy it once and then never have to worry about it again. But yeah, Tupperware Corporation may go bust and they might get bought out. Warner Bros. And Discovery have unveiled a new flagship streaming service labeled Max. It's a combination of HBO Max and Discovery to create the new streaming service. There will be 3 HBO, or not HBO Max. Shit, man. There will be 3 Max plans, $9.99 per month with commercials, $15.99 a month without ads, and a new $19.99 tier labeled Max Ultimate Ad Free, which will allow 4 concurrent streams up to 4K resolution and 100 offline downloads. I think I pay for HBO Max, and I think we're probably going to end up getting the $15.99 one. Or I guess it's going to convert over. But yeah, I'm not hyped on Max or anything. I barely use HBO Max. So this one doesn't really make a super big difference for me, but hey, more power to you. Congratulations, Warner Bros. Discovery. Mac shipments have fallen 40% year over year as the pandemic PC boom ends. The work from home era is over. And the hype, or not the hype, I think the relevance train on the Apple Silicon units. I think that it's just part of the Mac lineup now. It's still a huge selling point. I think having the Apple M1, M2 processors, I think they're still really big selling points. But yeah, shipments are down 40%. And I think that that's going to keep happening across the broad tech industry. Because guess what? People can talk about planned obsolescence, and I think it's a very real thing. Planned obsolescence is definitely real, and that's how corporations keep raking in that money, recur customers by making shit that breaks. They're definitely doing that. But also, processing speeds and actual technology quality has been increasing. It's still compounding. Shit is still getting better and better and better, faster and faster and faster, stronger and stronger and stronger, more durable, longer lasting battery over a long period of time. They are getting really, really good, and they're only going to keep getting better and better and better. So people need this stuff less and less. I used my iPhone 7 for 5 years. I'm probably going to use my iPhone 11 Pro Max for 5 years. I'm gonna run it until it probably stops getting software updates, and that's gonna be in 2.5 years or so. So yeah, the only reason I would be updating is for the new software, and I don't have 120 frames per second on my screen, and Daddy likes 120 frames per second. Let's be honest here. So I think that people are going to be updating and upgrading less and less and less until there's a new like breakthrough product. You ever think that they designed their chip to slowly decrease in speed, then in a couple of years down the road release the new chip, re-release the chip with a new label? Interesting. You know, Apple kind of, and like, you know, it's not just Apple, but like everyone kind of does this. Google does it with their Pixel lineup too. I'll pull that up too. Let's do like Google Pixel. Yeah, I definitely think that this is a thing. I don't know if Apple kind of does it. They definitely repackage their chips. Like, so the iPhone SE, this one is using basically, I think it's where the hell is their A chip? Their A15 Bionic. So I think they're using like last year's chip or like 2 years ago's chip. The iPhone 14, which is like their like mass market phone that they put out last year, it's using the same chip as last year. The only new iPhone with a new chip is the iPhone 14 Pro. If you take a look at Google Pixel, like they have a Pixel called the Pixel 6a. This is basically like the last generation Pixel. Like, so companies definitely repackage chips and excess inventory and they sell it off to people, like no question, because it just makes sense from like a production standpoint to do that. They already have the production processes down, so it's super cheap to manufacture. In terms of like having a chip and have it slowly slow down, then sell people the same chip but say it's new, I don't know if we've seen that. That would be some crazy anti-consumer shit. And maybe they're already doing it to us. I wouldn't be surprised if they are. But like, it seems like chips are getting faster and faster because it also benefits the technology corporation to put stuff on like the most cutting edge technology because it runs better, it runs faster. And like, that's a strategic type of marketing advantage that Apple has. Like, dude, the iPhones work so well. Like everything in Apple's walled garden, as they call it, basically like all of the Apple products together, they work so well. So I do think there's a certain degree of like, they want stuff to be faster so it's more convenient for Apple engineers. But I think that if they could sell people the same chip and just rebrand it every year, I think that they would. And there are parts of that we already see already. Like, there are parts of the chip that they don't improve and they put like all of their investment into, okay, we're going to make like this type of like process on this chip faster, like just rendering. Like, we are going to make rendering faster, but like Siri's still going to be just as slow. Or like, it's going to be like, it's not going to have any benefit to battery life. Like, it's not going to run more efficient. It's just going to be more powerful. So like, there are things that I think they like drag out from generation to generation so they can have like just more consistent increases across the line. But I don't know if they've completely repackaged the new chips or the old chips and said that they are new. I wouldn't be surprised though. Definitely not surprised there. Lastly, speaking of Republicans and Democrats from a little earlier, Chicago is slated to host the 2024 Democratic National Convention. Hey, whoop whoop. So the Dylan Holy Experience, you already know, is going to be covering this as soon as it's live. Like, we're just going to, it's going to be all day, every day coverage for the 2024 DNC. Who is going to be the Democratic nominee? Who knows? Joe Biden, maybe? Who knows? Andrew Yang? Probably not. But best of luck to you if you do run as a Democrat in 2024. I don't think he is, though, because he's part of the Forward Party. The 2024 RNC is going to be in Milwaukee. So we're going to go back-to-back with the RNC and DNC coverage. And I believe that brings us to the end of the Dylan Holy Experience Midweek Market Recap for tonight. To the members of the millions that are watching, thank you so much for watching. It's always much appreciated. And I always have a grand old time talking to the millions. It's 6:59 p.m. Pacific Standard Time, nearly 10 p.m., 9:59 p.m. on the East Coast. And I think I'll be signing off. But before I do, I want you all to be sure to give me a subscribe. YouTube.com/@DylanOllie. I'm giving y'all the best financial content you've ever seen in your entire life. Twitch.tv/RealDMH. Go ahead and give me a follow. Braden, I just wanted to thank you again for the follow tonight. Always much appreciated. And we're always live giving you your midweek market recaps, end of the week market recaps sometimes. And also, if I play Destiny, I will sometimes stream it. Lastly, Twitter.com/RealDylanHoley or @RealDylanHoley. I'm giving y'all breaking news. Let me know if you're trying to play something, man. Let's do some Grandmasters. I'm down. I'm real down. Always. Twitter @RealDylanHoley. I'm giving y'all key takeaways every single day. Whenever the market is open, the Dylan Holey Experience, is always open, giving y'all breaking news, the most important things, hand parsed, that I believe the millions should see on the market. And I give y'all breaking news as it comes out. I do market moves, so we know exactly what's happening. Dow Jones, S&P 500, Bitcoin, and gold. We always have a pulse on that. And, of course, general bullshittery as well. I'm going to let the million say the other half. But there we go. Midweek market recap, the Dylan Holey Experience. Thank you, all members of the millions, for watching. And y'all have a good night.